Oh, there I am. There I am. Okay, guys, here I am. I hope you can. I hope everyone can hear me. Welcome to the very first live webinar, and I'm excited to kick things off. Let's bring on my co-host, Parker Couch with Homestar Financial.
Hey
Parker
Omar,
Couch,
how's it going?
what's happening?
Man, I am so excited. I know we've been really preparing for almost 3 weeks for this incredible webinar. And thanks so much for thinking of me and thank you so much for partnering with me. I'm excited.
I'm glad you're here. I'm glad we're doing this, and I'm glad we're gonna present all this good information to to veterans in the Austin community. And if you're joining us from elsewhere, that's great because I think what we have is going to give veterans like an edge to when they're presenting their offers if you're in the market to purchase a home. So let's move on. Okay, so I served 4 years in the Marine Corps, and I was stationed at Camp Pendleton, 22 area for those who were stationed there. And one thing when I joined, well, when I became a realtor, was I knew from the get go that I was gonna serve, and I wanted to work with my fellow veterans because even after you get out, doesn't matter if you're in for 4 years, however long, you still want that camaraderie. And every time I meet a veteran, we always have that kind of instant connection. And I just love, I mean, almost my whole professional career after the military, I've always somehow worked with other veterans, and I just, those are my people. So that's one, that's the major reason why I'm doing this. And I found Parker Couch here who feels the same way as I do for us to serve and work with veterans and so they could use a VA loan and understand that it's a great vehicle to use to not only get home ownership, but as a way to get financial freedom. So, Parker, tell us a little bit about your picture here.
Yeah, so this is a picture of myself, my wife Missy, my two daughters Marley and Evie, and then our godson, my wife and I's godson Carlos. So Carlos, we got custody of him when he was, I believe, a junior in high school, and he is currently active duty Air Force, serving over in the UK. We're just so proud of him. Just I don't think that unless you've served or unless you're a family member of someone who's served, you really just don't know the pride that comes with either serving or having a loved one and a family member that serves. And so, thinking about Carlos, whenever he does decide that he wants to become a homeowner, it is so important to me that he's able to actually use what I think is one of the absolute best things that we can do for the men and women in uniform, and that is the VA loan. It's a loan where you can go and buy a house and put $0 down. So it's definitely something I'm personally really passionate about.
That is fantastic. And he is a lucky guy to be stationed in the UK. I would have loved that. That was one of the reasons why I joined,
He's
but
having too
never
much
got.
fun.
Man, that's a good place to be. That's a good place to be. And much respect to all my service members, no matter which branch you joined. Even though I will always brag about the Marines because we are the smallest branch, and that's why we're the best. Okay, so let's move on to the overview of what we're going to be discussing in this webinar. So here are some key points that we really want to discuss, and hopefully you have a few takeaways. So in the first part of this webinar, we're going to be talking about the most frequently asked questions that I came across when I was doing my initial research when I was for VA home loans. We won't quite get to all 15 because of a time issue, but we'll probably get to the first couple of questions, and uh, we'll do a hard stops because I really want us to discuss the HomeStar Cash Advantage program, which is like the key thing that is really gonna that Parker's gonna present to in this webinar. So he'll show you firsthand how you can present an all cash offer, but still close it with the VA loan to kind of give you like a fighting chance in this seller's market because cash right now is dominating all offers. And if you don't have that, unfortunately, it's you're probably not gonna probably win your bid. And then if we have time in the end, we're gonna do a live Q&A. But please, if we don't get to your questions, just leave a post on the comments below, and we'll get to you on the next round. Okay, so let us. Go to question number one. Uh, do lenders perform hard or soft inquiries during a mortgage proposal pre-approval process if I'm simply seeking a quote?
Yeah, it's a really good question. So, for a formal pre-approval process, that we do require a hard credit pull. The reason is we want to make sure that we're confirming your credit score. We want to make sure we know your monthly liabilities or debts. That being said, if you just want to get a sense of how much home that you can buy, how much you qualify for, we do not need to pull your credit. As long as we have ballpark numbers, that's going to give you a good enough idea of like, okay, it looks like I actually am ready for home ownership. And once you've cleared that hurdle, then yeah, we probably do need to pull your credit so that we can get you that official pre-approval. But no, go ahead and just have a conversation with me or another lender. They can manually calculate everything and kind of give you a good idea of where you stand.
Gotcha. So I know people hear a lot being pre-qualified and being pre-approved, and that initial conversation where it's pretty casual, where you don't have to present any documentation. That's what it means to be pre-qualified.
Yeah, yes and no. So pre-qualification, we still want to see some basic documents, but here's the best way to explain pre-qualification versus being pre-approved. To be pre-qualified is where you're saying, "Hey, this is where I work. This is how much I make. These are my debt obligations." It's like the information that you're volunteering up to the lender, okay? Pre-approval is where the lender is taking what you have put on your application and verifying it, right? So
Mm,
pre-qualification is, hey, based on what you're telling us, this is how much you're pre-qualified for. And then pre-approval is, hey, based on what you told us and based on what we confirmed, right? This is how much that we'll be able to lend you. I know that's kind of a very fine distinction, but it is an important one.
gotcha. Okay, let's move on to question number two. How do you get a certificate of eligibility?
Oh man, and Omar, you might actually be the right guy to answer this. All I'll say is that from working with veteran borrowers, the veterans who on their out processing, so they're active military, they're active duty, they then decide that they want to go ahead and retire from whatever branch they're in. Just get with your out processing officer or your CO and just say, hey, I want to go ahead and get my certificate of eligibility as well as your DD 124. Yeah, I always get the
DD
DD 214, right? I
214.
always get the number. Yes, right, the DD 214. Um, and so yeah, that being said, Omar, I know you've done some research recently. If you've already been out processed or if you're already active military, what's going to be the best way in your opinion to get that certificate of eligibility?
So once you're making your exit out of the military, that is like the most important document that they give you when you're processing out. But I know that a lot of veterans lose it somewhere in the process after they get out. So if you on the YouTube live link in the comment section, I've tag the URL link so you can get your D214 and you can get your certificate of eligibility. So just click on those links and it'll give you step by step. You're gonna have to create a username and password to access like the web portal to get this documentation. But now everything's web based, so you can get it online. You don't really have to call anybody because we know how long the wait time can be. So just follow those links, and that way that'll kind of get you in this ball rolling. Okay,
Awesome.
so let's move on to question number three. Here we go. Okay, I have a Chapter 13 bankruptcy. Am I able to apply for a VA loan?
Yeah, good question. This is maybe one of my favorite features of the VA loan. Super forgiving for any veterans who have a Chapter 13 or even a Chapter 7 bankruptcy. So here's the big thing about a Chapter 13 bankruptcy is you want to make sure, and just for those who don't know, Chapter 13 bankruptcy is where you have some type of court ordered repayment plan to where it's saying like, hey, I'm going to need these debts off of my credit report. But I'm also willing, based on my income, to repay them over a set period of time. So, with the Chapter 13 bankruptcy, here's what we need to see: we need to make sure that you are currently in that repayment plan. We need to make sure that you have made at least 12 consecutive on-time payments on that repayment plan. And then we'll also need essentially a letter from the judge or the court that structured that Chapter 13 bankruptcy repayment plan, essentially signing off and saying, hey, X person has done a really great job on their repayment plan. We're fine with them getting a house. So definitely a little bit like some extra legwork that's involved, Omar. But it is out of all the loan programs, it is certainly one of the more forgiving and understanding when it comes to bankruptcies, especially recent bankruptcies.
Wow, so there still is a way, and I mean, you shouldn't let that deter you from still reaching out and figuring out the steps necessary so we can get you to on the right path.
Absolutely.
Okay, awesome. Okay, question number four. Can I co-sign my stepfather or other relative for a home loan?
No, you cannot. So, pretty much any other home loan, you can have co-signers, but for VA, it's very strict. You can only have a fellow veteran co-sign, or you can have your spouse, whether that spouse is a veteran or not. Now, you're probably saying, like, wait, so that means that if my buddy's a veteran, then my buddy can co-sign with me? Absolutely. That's one of my favorite hacks in the world is where you see two veteran buddies co-signing and maybe buying a triplex or a quadplex, pooling together their resources to buy a multifamily type property. You can get really creative. Now, I will say that because your stepfather can't co-sign, that doesn't mean that your stepfather can't help out. The VA loan allows for gifts from family and friends. It even allows for something as out of the box as the seller maybe even paying off credit card debt. Let's say that, oh man, you can't quite qualify because of your credit card debt. The seller can actually agree to pay off your credit card debt and other types of debts to get you across that finish line. So just because your stepfather who's not military can't co-sign with you doesn't mean that friends and family who are non-military can't be helpful in other ways. But if you want a co-signer, find, find either a spouse or find a buddy who's a veteran, because that's going to be your best path forward.
I had no idea that I could. I mean, it wasn't even registering when I was in that I to use the VA loan. It was like I'll use that once I get out because that's when, because in the military you kind of aren't unsure like how long you'll spend in one place because typically every 2 years you have to move. But it doesn't. It shouldn't stop you from still checking out the real estate around your area because you could always use this as a vehicle to as an investment opportunity, right? It's not your forever home, right? I always kind of thought in terms of like, okay, if I buy my first place, I'm where I'm gonna live forever. But use this kind of as a strategy to use your VA loan while you're active. I think that if you're active duty member, it should probably be pretty easy as far as getting all your documentation and like it's a pretty secure loan in the eyes through the eyes of a lender.
Oh, and,
Makes
and
sense.
to add on that too, Omar, and I think this is so cool. So let's say that I'm a veteran, you're a veteran. Actually, let's say we're both active duty, right? And we're
Yeah.
stationed in El Paso. Okay, cool. So then we say, all right, Omar, let's pull together our money. Let's try to buy ourselves a duplex. So you and I, we buy a duplex. I live in one unit, you live in the other unit. And then wouldn't you know it, we both are being sent to Fort Benning in Georgia. Georgia? Yeah, that's right. Fort Benning in Georgia. So then here's what's cool about it. We own this duplex, right? Well, as long as we get a lease in place and a security deposit cashed, we can use rental income for that duplex that we bought and we lived in and are about to leave. We can actually use income from that duplex as qualifying income when we try to buy our next property. Okay. Not only that, we can use our basic housing allowance. We can obviously use our salary. Here's why that's important is let's say that you barely have enough income as active duty to get to get that duplex. Well, by the time you're able to buy your next property in this scenario, think about it. You've got your basic housing allowance, you've got your military pay, but then you've got, let's say, 800, 900, $1,000 a month in cash flow because you're renting out each unit. And obviously your rent's going to be more expensive than your mortgage. Then all of a sudden, you've got $1,000, you have $1,000 extra a month in income that you can show. And then maybe instead of buying a duplex at Fort Benning, you buy yourself a triplex, something a little bit more expensive because you've got higher qualifying income. And you can see how it can start to snowball. And so I'm really glad you brought that up. A lot of folks thought the same thing that you said, which was, oh, I'll use my VA loan when I get out. But actually, it might be the best time to use it if you are active duty, because you can, when you retire, you could find yourself looking up and having an investment property portfolio.
Wow, that's incredible, man. Okay, let's go on to question number five. How should I start the pre-approval process if I plan to purchase in about 12 months?
Love this question. So your pre-approval is going to be good for 90 days. So you kind of have to think through, like, okay, to be pre-approved, I'm going to have to my credit pulled. And if you haven't gone under contract and closed within 90 days, then that's fine. We can update your pre-approval, but your credit will have to get pulled again. So I would really recommend not getting pre-approved until you are serious and active when it comes to making offers on homes. That being said, kind of what we talked about in question one, if you're getting pre-approved, if you want to get pre-approved and start shopping around in 12 months, go ahead and get pre-qualified, keep an eye out on some things, and who knows, you may bump up your timeline. But just keep in mind, pre-approval, good for 90 days. You don't want to have your credit pulled a million times unless you have to.
Gotcha. So good initiative to kind of be thinking that far ahead, but 3 months is really the solid kind of time frame for how long that I guess the term rate will last when you apply. Okay. Number six, my husband and I would like to start the home buying process and figure out what we need to do to get approved for a VA home loan. Where do I start?
Yeah, so kind of this question touches on answers for other questions. Number one, you really need to find a lender so that you can go through the pre-qualification and or pre-approval process. During that process, that lender is going to ask for some basic documentation. For example, I would ask for your most recent 30 days worth of pay stubs, your most recent 2 months of bank statements and asset statements. I would also ask for your last 2 years of W-2s, maybe your tax returns. We just want to verify your employment and verify your income. Now, for VA, you're going to need your COE, Certificate of Eligibility, as well as your DD 214, right? And so there are some military specific documents. And Omar, I know you're always preaching being organized, especially if you're a veteran, right? Like you learned that structure while serving, might as well use that when it comes to keeping your documents nice and organized. But no, just contact a lender, and hopefully it'll be me. Then once you're pre-qualified and or pre-approved, then you just need to give Omar a call, because then he'll know the price range in the area in which you'll be able to go out and buy a house.
Gotcha. And typically, I mean, nowadays, all that documentation is submitted online, correct?
That's right. That's correct.
Right. So you want to make sure that when you scan everything in, all the paperwork that we're talking about, that's where naming everything appropriately, so you keep everything in one place, because chances are you probably will have to come back to it again. And I know it could be this the whole process could be stressful enough when you can't find a document. So label everything and making sure it's backed up, so you have it's not just in one place, is vital to make sure like this whole process is pretty smooth. Okay, so let's keep going. Okay, how many borrowers can I have on one VA loan?
Yeah, that's a really good question. So, and I did a little bit of research on this. It depends on if you're buying a single family residence or a townhome, or maybe you're buying a triplex or a quadplex. There's a fine line between, hey, it's me and my four VA buddies. We're all veterans. We want to buy a quadplex, meaning 4 units. Okay, that's something that an underwriter will be able to wrap their mind around. That being said, if it's, hey, these are my 6 VA buddies and we want to buy this one house, that's going to come across like you guys are not going to use that as your primary residence, and you're actually going to use that as like a backdoor investment property purchase. And so there is no, and there are hard and fast rules, because that's what underwriting guidelines are. But just kind of keep in mind, it's saying like, okay, And also, for example, Omar, like if you are a veteran trying to buy a single family house in Pasadena, California, right? It may take four veterans on the loan to be able to actually purchase that house. That being said, what's a more likely scenario is you want to have the minimum amount of veteran borrowers on the loan to make the debt to income ratio work, meaning, hey, based on we're pulling together our resources and income, we can get this property. And then if that mortgage payment is still too high for you, go ahead and just find some roommates and rent out some rooms. Um, so yeah, just you want to make sure that you're not being duplicitous at all, and you're being sincere in that, hey, me and my veteran buddies, we really are planning on buying this house as our primary residence. That's the big thing. So I don't know if
Yes,
that
I'm glad
answer
you
makes
said that.
sense.
No, you did. I was gonna say that what you just said at the end right there was that it has to be your primary residence. I know we're talking about using it as a vehicle, like as a real estate investing, but we mentioned like having a duplex or triplex where you're still using one of those units as your primary residence and then renting out the other
That's
rooms,
right.
because you just can't solely use it and pay nothing down and then rent it out. That's not how it works.
Yep. Yeah, you have to, in good faith, say, hey, I'm going to use this as my primary residence. And if that's for 2 years, because that's how long you're stationed in a space, that's fine. When you applied, you really did plan on using that as your primary residence.
Super cool. Okay. If I'm planning to retire in 12 to 24 months, can my retirement income be used when applying for a VA loan?
Unfortunately, no. So then this is a common mistake folks will make is just because you're planning on that money getting there doesn't mean that we can count it in the future. And here's the reason why is there has to be some type of guarantee of continuance. And so let's say that you plan on retiring in 12 months and you can tell me how much your retirement is going to be. Well, let's say if God forbid you got, I mean, this is a crazy example, but you got court martialed or you went AWOL or something crazy. Like there are things. So it's a slight chance that you could do that could compromise your retirement. So that being said, if you're retiring, let's say in a month and you want to buy as soon as you get out, then as long as that retirement is kicking in and you're getting, and we have proof of that retirement's payment starting before you close on your loan, then we can use the retirement, if that makes sense.
Totally. Totally. That makes sense.
These are good. These are good questions, Omar. You had some hard ones that the men and women sent in for us.
Okay, let's talk about VA energy efficient mortgage. What is it?
Yeah, this is an awesome product that will hopefully be something that we could use a little bit more than we do now. And here's why I'm hesitant about this. This market is so crazy competitive right now. And so offers that include the least amount of red tape are the offers that are going to win. And that'll be a segue to our Cash Advantage program presentation here in a second. With this specific program, essentially what it's saying is if you're trying to buy, let's say that you're buying a house from the 60s that still has the window units, right? And you're like, man, these window units are super inefficient. They're not cooling down the house. This place really needs like an eco-friendly HVAC system. Well, there's a process to where you could get a quote for that HVAC system, and then you could finance the cost of that HVAC system into your loan amount. Okay. The problem is like there's a lot of documentation, a lot of red tape when it comes to getting bids and contractors that be VA approved, and so it almost always ends up just adding complications to the deal. That being said, let's say that you found the perfect property that's been vacant and on the market forever. Sure, go ahead. But if you're trying to win a house that just got on the market that weekend, you probably shouldn't lead with this program and product.
Mm, understood, understood. So it is, I guess, the timing has to be right for this to make sense.
That's right. And you can always refinance. That's the thing about veterans don't realize is you can refi into a different type of VA loan and still be a VA loan. So that's also something to consider too.
Hmm. Okay, I think we're gonna do one more question and then we're gonna turn it over to your presentation. So
Awesome.
let's do the last one here. My husband is a 100% disabled veteran. A realtor has said previously that due to his disability status, we may qualify for a lower closing cost. Is this true?
Yeah, this is great question. Every state's a little bit different. I know in the great state of Texas, though, there's a scale to your disability. I don't have that scale memorized, but for this question, if you are a 100% disabled veteran, then you are essentially exempt from property taxes. I believe up to $14,000, and that's a huge break. Now, how does that save you in your closing costs? There's something called an escrow or prepaids. An escrow is like a forced piggy bank. We don't really have time to get into it. But that being said, is when you close, even though you're bringing $0 for your down payment, you do have to prepay usually anywhere between 3 to 5 months worth of property taxes up front. Okay. So
Hmm.
let's think about that. If I have property taxes, that if you divide my property tax bill by 12 months, let's say that I'm going to need to pay $300 a month in property taxes as part of my mortgage. Well, if you're not exempt from property taxes, that could be $1,200 or 4 months in advance that you need to prepay into your escrows. $1,200 that you need to bring to closing. That being
Hmm.
said, if you are 100% disabled and you are exempt from paying property taxes, then you don't need to bring that $1,200 to closing because you're not prepaying those property taxes into your escrow. I know that was probably a super confusing answer, but no, that realtor is right. If you are 100% disabled, you will absolutely save money on your closing costs because you'll be exempt from most, if not all, of your property taxes.
Wow, that is incredible. And remember, everyone, we are recording this, so if you miss something or if we're going too fast, you will be able to replay it. That way, it'll sync it. And if worst comes to worst, you can always reach out to us and we can talk over the phone in a little bit more detail of what we're about to present. So let us move on to your presentation, Parker. Let's see if you can get
Awesome.
that pulled up for us
Yeah,
and
let me share this screen.
share your screen here,
All
and hopefully.
right. Let's see if this works. And forget I got a 3-year old and a 1-year old, and they're ruckusing behind me. Omar, can you see my screen? Okay.
Yes.
Awesome, fantastic. Okay, so this is the HomeStar Cash Advantage program. We've teased it all night. Let's jump into it. You've seen this picture, but what exactly is it? So we have a private labeled partnership with a company called Ribbon, Ribbon. Ribbon, we can again get way more into the details about what Ribbon is, what it isn't. Here's the important thing to know. You're making an all cash offer with no appraisal contingency, no financing contingency, but you're closing with your VA loan. What this means is that as a veteran, you get to compete with cash. This is pretty incredible. Um, Here's what it's perfect for. I'm going to focus a lot on this ribbon boost. That's where you are making a cash offer, but closing with your VA loan. That being said, we also offer this program to where let's say that you're a veteran who already owns a home. Well, there is an option where you can go out, buy your new home with cash, move into your new home, then sell your old home. Then you'll have the cash from the sale of your old home, and then you'll be able to buy the house, your new house, back from Ribbon at the original contract price. A little bit more of a complicated program. So we'll focus mostly on this, but this is an option. And we're not going to talk about the Ribbon Rescue right now. It's not super relevant. So, what are the steps needed to convert an offer to cash? Super easy. One, get pre approved. If you get pre approved with me, because we're a partner with Ribbon, you'll automatically be registered and you'll have access to cash buying power. What that means is I get you pre approved, I upload your pre approval, boom. If I pre approve you for 350,000, you can make a cash offer up to 350,000. Then you will find a house. Let's say that you really like a house that's in Georgetown or Round Rock or Buda. Well, guess what? Text Omar, text me, say, I like this house. We then put it into Ribbon and we will get a property valuation. We're going to go over the difference between list price and max Ribbon value here in just a little bit, but you do have to get a valuation of the property. There is a limit to how high you can go with your cash offer. And then you write an offer. You're writing an all cash offer, no financing, no appraisal contingency, but there is something called the offer addendum, which gives you a ton of protection. And let's talk about that. First, let's do timeline. So with this timeline, ribbon offer is accepted, meaning you have offered on a home, it has been accepted. You have a 7-day inspection period. What an inspection period is your inspection period is really your 7 days. With ribbon, they require 7 days, but it's your 7 days to have a home inspection and to make sure that the home is structurally sound and that you're still feeling good to buy it. Just as important, ribbon wants to make sure that if they had to buy the house, then it's also structurally sound. Once the inspection period is done, it is a guaranteed close. Even if you back out, Ribbon is contractually obligated to buy that house with cash. And then come closing day, if you show up on closing day with a HomeStar loan, then Ribbon will charge you 1%, but HomeStar will actually give you a 1% lender credit to offset it. So that's right. You're pre-approved with a VA loan. You make an all-cash offer, but you close with that VA loan and you did it at no cost to you whatsoever. Now, let's say that you show up to closing day and you don't have your loan ready because you bought 2 jet skis and you quit your job and you moved to wherever. Well, what would happen is because you didn't have your loan ready in time, Ribbon would step in, they would buy the house with cash, and you would have up to 180 days to buy the home back from Ribbon at the original contract price, but you would lose your earnest money. Now, I know that's a lot, so let's actually try to make this real life. And if you're watching right now, I want you to briefly close your eyes and I want you to picture James. James is a Marine veteran, just got out of the Corps, on Facebook, sees Omar's videos. He's like, this is my realtor. He's a Marine. He gets it. I want him to find me a house. Now you can open your eyes. Let's talk about James's journey. Step 1. James is a veteran of 5 years and he wants to buy a house. Step 2, James calls Omar. Omar is an amazing realtor. Omar, you can Venmo me later for saying that. No, you are an amazing realtor. Step 3, Omar tells James that most sellers are not accepting VA offers right now because the market is so competitive and sellers want offers with less red tape. James is so sad. Here he's been serving our country. He's now out in the private sector. He wants to buy a house. He wants to use his VA loan, which he worked really, really hard to get. And only for Omar to say, hey, man, sellers just aren't digging VA offers right now. They say there's too much red tape. Well, guess what? Omar then connects James to me at HomeStar, and James is pre-approved for $400,000, 0% down VA loan with me at HomeStar. That's part 1. Part 2. Because James is pre-approved with me, he automatically qualifies for the HomeStar Cash Advantage program powered by Ribbon. I then registered James and his realtor, my buddy Omar, in the Ribbon portal. James finds the perfect house that he wants to see. So then I would submit the property address to Ribbon for a property valuation. The house is listed at $365,000. And now, this is the exciting part, Ribbon comes back with a Ribbon value at $375,000 and a max Ribbon value at $395,000. You're like, wait, what are the differences between these two? Don't worry, we'll get to that. So now, part 3, step 11. James now can make an all-cash offer with no financing or appraisal contingency for $375,000. Notice that's $10,000 over list. Omar writes up this perfect, amazing all-cash contract with no contingencies except for a 7-day inspection period. James signs the Ribbon addendum, and this is what the Ribbon addendum does. The Ribbon addendum allows James to use financing, meaning a HomeStar loan, come closing day, as long as he actually shows up to the closing table with that loan. Omar submits the offer with an upfront deposit. That's earnest money equaling 2% of the sales price. So what that means is that James is having to, I was telling Omar, this is like if you ever go to a barber, like I go to a barber in Austin and he requires that I actually pay for my haircut up front. So when I show up for my haircut, it's already paid for. But if I sketch out on him, guess what? He's going to keep that money. That's what the earnest money is. It's your upfront skin of the game. It's not money you're losing. It's your upfront deposit. It's money that will be credited towards your closing costs. Okay? Because remember, you're bringing $0 down, but we still have some closing costs. So we were equaling 2% of the sales price. That means you're having to do $7,500. The seller accepts. James is now under contract. Step 14. Oh my gosh, the VA gods have struck again. The appraisal comes back low at 365. And oh my gosh, it doesn't matter how many bunt cakes and insomnia cookie orders James tries for the listing agent. They are not budging. Well, I got good news. The good thing is that Ribbon offers an appraisal protection, which means because James stayed at the Ribbon value of 375, which remember was $10,000 over list, Ribbon 100% covers that appraisal gap. That is how you're able to that's how you're able to get rid of the appraisal contingency. Because even though you're doing an appraisal because you want to have your own financing, if that appraisal comes in low, doesn't matter, Ribbon's going to cover that gap. Okay, so now it's closing day. James shows up to closing with his VA loan. The sellers get their money. James uses a HomeStar loan. Ribbon charges James 1% of the sales price, but HomeStar covers that charge with a 1% lender credit. Here's the best part. Closing costs end up being less than James's upfront deposit. Remember, James had to do $7,500. James then buys a house and walks away with a $1,000 refund or whatever amount was left over after all of his closing costs were paid. So let's talk about the price breakdown. And I'm going to kind of just leave this on the screen because we're running a little bit tight on time. So I'm going to go through fast. If you have questions, which I'm sure you will, then of course, give me a call, give Omar a call. So let's say you're buying a house for $500,000. That means you need to do a $10,000 upfront deposit. Okay. So now let's pretend like Ribbon has to buy the home first because you didn't have your loan ready in time, or maybe you are already living in a home that you own and you want Ribbon to buy your new home first. Either way, you got a purchase price of $500,000, upfront deposit of $10,000, a Ribbon fee of $10,000. Ribbon buys your home. You then move into that home that Ribbon just bought. You then use a HomeStar loan to buy back the house from Ribbon. What does that mean? Your purchase price is $500,000. You no longer have to do an upfront deposit, and you get a HomeStar credit of $5,000, which means how much did it cost for you to have Ribbon buy your new home with cash so that you could move in and then sell your other home? Well, it cost you 1% of the sales price. That's a pretty sweet deal, especially because if anybody is winning VA offers right now, they're having to go way over list, and then they need to have the cash to cover any appraisal gap. All right. But this is the scenario we were talking about where you're making a all cash offer and then you're closing with a VA loan. Purchase price is 500,000, upfront deposit is 10,000, the Ribbon fee is 5,000, the HomeStar credit is 5,000, which meant you were able to make an all cash offer, close with a VA loan, and it cost you nothing extra at all. And one last plug about HomeStar. So we are new to Texas, but we are not a new company. We're actually a full service mortgage company. I'm not a broker. Starting from loan app all the way to funding at the closing table, you're going to deal with me and my team. But we also have an amazing reputation and history in the Atlanta market. We're the number one purchase lender in the state of Georgia. We have done so many VA loans. I mean, you can see right here, number one USDA, number one in FHA. We're the number one purchase lender for jumbo FHA, conventional USDA, and VA for the past 3 years in Georgia. So you really are in excellent hands when it comes to the VA loan. And also my father is my boss. He's my division manager, and he's literally been doing loans for decades. And VA, it's his favorite loan in the world to do. So that is the super fast, blazing speed overview of the HomeStar Cash Advantage program. And I think we got 5 minutes left, Omar.
That was a lot. And I know when I first heard about this program, I was just like, huh? I know it's a lot to take in initially, and you probably will take subsequent uh, um, just listening to it again and again to kind of let it really sink in. But Parker has done this loan a few times already, and it does work. And this, I mean, right now more than ever, we're in a seller's market, and it probably is not going to change anytime soon. Even though I am seeing a shift with the price reductions for the past couple of weeks around Austin. But more than anything, this program is going to give teeth for veterans to use to present an offer, so they could still use the VA home loan, and you have that benefit that that I earned, that all of you earned. So it's not something that, I mean, don't let this market stop you from just reaching out, because information is key here, right? You don't know what you don't know. So reaching out is step number one. So we can because everyone's going to be different as far as what their situation is financially, and where and how far out they want to purchase a home. So I hope
And
this
and
webinar,
Omar,
yeah,
yeah, I just want to jump in one second. I forgot something that's super important, and I get this question all the time, and it's what's the catch? Or I
ah,
think that a better way of saying that is, uh, all right, like where how do people get paid? Like follow the money. So let's follow the money, because anytime you follow the money, that's where you get to the catch. So right now we have record low inventory, which means in the mortgage industry, in my industry, I currently right now have 40 right now. Not in my history. I'm talking about right now. I have 40 fully pre-approved buyers who are actively going out and making offers on homes. And guess what? They're not going under contract, because four for every four homes currently, there are 2,000 pre approved buyers looking for those four homes. That's how tight it is. So, what does that mean? Why would we do this? Well, as you can see, we're the ones paying the fee, which means that we're taking a cut. I'm taking a cut in my commission. We're taking a cut as a company. And yes, we're getting a haircut on a loan, right? We're not getting that loan for full price, not making our full margin. But here's my question is, what good are 40 loans at full price that never close? Zero times zero is $0. So, would it not be in HomeStar's best interest to do whatever it takes to get people to the closing table and to get people a loan? And yes, it's the right thing to do. We believe in home ownership. I believe in home ownership. I believe in home ownership for veterans. But at the end of the day, we're not some nonprofit charity organization. We're a full service mortgage company, right? And so that's the reason why that's the catch. That's where the money is we are willing to take a haircut on loans. I'm willing to take less commission just to get loans to close. Now, how does this benefit Ribbon? Well, think about it from Ribbon's perspective. This is the greatest setup in the world for them. They literally don't have to do any work, right? Now, if they have to buy the house, of course they do. But this program that we've been talking about is borrower gets pre-approved through me. They go under contract. They close with a HomeStar loan. Ribbon just had to we just had to borrow Ribbon's name, right? It's kind of like having an uncle in the mafia or something, right? It's like he sits in the car and never comes in, but at least you know he's in the car. So for Ribbon, their benefit is they're not having to buy the house. They're really not having to do a ton of legwork. And so what happens? They just get 1% cuts, 1% of the sales price cuts being paid out by HomeStar. And then how does this benefit the veteran or the consumer? Well, I think you just heard you get to use your VA loan. And the reason you get to use your VA loan is because you were able to wrap a cash jacket around it and make that cash offer. And so there is a catch, meaning yes, Ribbon's making money. Yes, Homestar is making money, but the market conditions are such to where what we are having to do in order to keep our lights on is actually coming at the great benefit to veterans, because they're the ones who are going to be able to make an all cash offer, no contingencies, and close with a VA loan. And I just wanted to make sure I addressed that, because I could already hear what's the catch. And so hopefully that gets out in front of it.
well, that was very well said. Way that is incredible to hear, and that is how you adapt and overcome, ladies and gentlemen. Because we are in crazy real estate times with little inventory, and it's just getting harder and harder. I mean, buyers are fatigued by having all their offers submitted, and no one, and not getting to the closing table. So we hope you enjoyed this live webinar. We expect to do more of these in the future, so stay tuned. Make sure you send us your info so we can update you when we go live again. And that's it. Thanks, guys, for joining, and we'll talk to you later. Parker,
Thanks so much,
always a
Omar, for
pleasure.
having me on, man. Love you, dog. I'll see you soon.
All right. See you, man.
All right, bye.